Today's video is on KLIP. It has a 50% dividend and it contributes to my income here of $114,000 per year. It's a covered call fund that tracks Chinese internet companies that was brought to my attention by one of my subscribers. So we're going to cover that today. I also want to show you that we're down 0.4%. Is that in line with the market? Yes, the Nasdaq's down 0.8, the S&P is down 0.3, Dow's down 0.16. So we're in line with the market, and I'll show you why we're down. I think it's basically, as you can see, the Nasdaq is down the most. And yes, my Cornerstone funds are contributing to that number. It's about half the number. So what I'm down today, Cornerstone's half. But the other fund that's showing weakness is OARK. But that's okay, because how's Tesla performing? Tesla is down 4% or so, because Tesla is down significantly. So you can see here in the short, Tesla is down about 3.3% because our short's down 3.3%. So these funds are performing, to me, generally in line with the stock, with the underlyings. That's fine. OARK's performing in line with its holdings, which its largest holding is Tesla. So Tesla, which has a 60% dividend, OARK has a 40% dividend. These are covered call funds. Apple, also, that's the covered call fund that tracks Apple. I don't know the dividend yet. It's a brand new fund. We are estimating, my subscribers are estimating around 20 to 30% dividend for Apple. But KLIP has a 50% dividend if we go check that out. It's a covered call fund, again, that tracks Chinese internet companies, 53% dividend. And I like it because the fund that it tracks, KWEB, it's had a significant move off the lows from 20, as you can see here in October, to 35, which is over a 50% move. So that's when you sell covered calls. And here's the portfolio of KWEB. If you want to see it, owns some of the top Chinese internet companies like Tencent, Alibaba, Baidu, etc. Here's its website, Crane Shares, if you want to go check that out briefly. Here's the fund, KLIP. It's the China Internet Covered Call Strategy ETF. Sells covered calls on these holdings on KWEB. Here's YieldMax, OARK, by the way. We've done a video on OARK in the past. Go check that out. But you can see how OARK is a covered call fund as well that tracks ARKK. By the way, this is not covered call. Actually, YieldMax, they are synthetic. If you want explanation on that, go see my past video again on OARK. But OARK generates 40% premiums, and KWEB, or KLIP to be exact, generates 50% premiums. KWEB is way off its highs. It's cheap. Even though it's had a move off the lows, a large move off the lows, KWEB, it's still cheap, and it's considerably off the highs. So if you look at it on a 5-year chart, you see that it was at 100, KWEB. So even though it's had a move off the lows, it's still a considerable amount off its highs. So I like KWEB. It's cheap. It fulfills Chinese exposure, which I need in the portfolio. I need international exposure for proper diversification. And as you can see, our performance and value is reflecting this diversification, because we're up 15.8 for the year. The Dow's up 2, the S&P is up 7, and the Nasdaq's up 15. We're beating the Nasdaq by a fraction at the moment. So today we're down 2,200, again down 0.38, which is less than the market, but the Nasdaq's down 0.69. Well, Tesla is a large part of the Nasdaq, so we've shifted a lot of our tech exposure. We've sold a lot of it. We sold our TQQQ position, and we sold half of our EOS position to make way for ARK. Even though it's not pure index and it's more hyper growth, OARK still has its largest holding is Tesla. So Tesla is a large holding of the Nasdaq. That's how we're going to mirror the Nasdaq. And if you can just mirror the indexes, then your performance is always going to stay where you want it to be. Even though we're using a heavy margin strategy, which is generating this $114,000 per year in dividends, we have to make sure we tie all this margin to the indexes to be safe. Even if you're not using margin, you want to tie your investments to the indexes, I believe. But this 237,000 number that we're using in margin, which we're only charged between 5 and 6% on, depending on how interest rates are rising or falling for that month, that is only 5 or 6%. So the dividends that we're receiving from Cornerstone and these others, that 20% here, top holdings are Cornerstone because they're 20% dividends in their 4-star funds. But OARK, we've made it more of a top holding, along with GOF, which is a 4 to 5-star bond fund. And you want to get into bonds when interest rates are falling, and bonds are super cheap right now. And we've done videos on GOF in the past. Check that out. So I've made this a larger holding because it has between a 13 and 15% dividend, depending on where you bought it. And OARK is above GOF now, so that's a considerable amount of risk. GOF is bond, that's safe. Cornerstone, and these Cornerstone funds have no leverage and just track the S&P and NASDAQ, so they're generally safe to me. But OARK is hyper growth, and that's going to skew my performance heavily if this falls, OARK falls. But again, I've sold a lot of tech to make way for it. Am I going to lose performance? What if hyper growth falls and the rest of the NASDAQ goes higher? Well, again, I like how OARK has Tesla, and it also has some other I remember it having NVIDIA. Once I looked at the complete holdings of ARKK and ARKW and those things, and Kathy Woods gets a few S&P names in all of her funds to balance out the performance and the volatility of her funds. So I don't mind having 20K OARK plus whatever these losses sustain in the open market. Down 2% today, down $500. I don't care. I don't care that I'm down 500 or 1,000 in the position because I'm getting paid 40%. So not only is ARKK pulling back, so I'm okay with the pullback because I'm invested with ARKK, but the dividends of 40% mean that I'm still up 35% for the year if I hold for a year. So this 4% is nothing for me because I'm making 35% once again. Plus, I like earning this amount of dividends because all it's doing is qualifying to the banks. These dividends act as a pay stub to the banks. So this is how I live financially free, and the more dividends I earn, the more I qualify for loans to banks. Even if I'm losing in the open market here, I can just bring in more money from banks, from loans, and that pays back my margin down here. This number down here pays back my margin, so I don't have to pay interest on that. And then I just collect more dividends in these ARK funds or whatever funds I'm in. Even if they're losing, it doesn't matter because the dividends pay back the margin debt or the loans that I'm taking on, whether it's this loan through E-Trade or through other loans outside of E-Trade. The dividends pay them back constantly. And as long as the fund moves higher left to right over the course of time, like Cornerstone, for example, even if you were to have Cornerstone's share price tank and go into the mud, if you look at a chart of Cornerstone, if you look at it on a real total return chart, though, on Morningstar, you'll see, by the way, it's 4-star, but you'll see that it's generally gone upward left to right, and it's outperformed the S&P. We're at 50,000 in Cornerstone, whereas the S&P is only up 40,000. But if you go look at a chart of Cornerstone, it looks completely different. It's just gone sideways into the ground. See this chart right here, just into the ground at the lows. Okay, it's gone into the ground. If you go into a full-time chart of Cornerstone, look at that. It's just been ridden into the ground. People want to knock Cornerstone so bad for this visual, but again, you look at it on Morningstar, completely different story because we're getting dividends and we're dripping those dividends at the NAV. So look at our past videos on Cornerstone, dripping at the NAV. They give us automatic 30% gains each month. Whatever the NAV price is, they drip it at that NAV price. As you can see, I'll just show you quickly. 410 here is where they do the drip at the beginning of the month. It's a little delay, but 16% we're up in those shares. Automatic 16% gain. Sometimes the premium to NAV is 30% or 40%, but right now it's 16%. So they drip it at the NAV. I know that's a confusing term right now if you're confused, but the net asset value. But go check out those videos if you're interested in Cornerstone. That's what anchors the most of my portfolio. But okay, so ARK, we're down in it once again, but I don't mind because I've substituted a lot of my other tech names, the triple Qs and all that, and let those clear the way for OARK. And so I'm okay with a little bit more volatility here. Also, because it's our dominant tech fund, and also it doesn't matter what the volatility is because the dividends pay back the losses, as I explained earlier. So KLIP, there's not much to say on KLIP. It's the Chinese version of ARKW, in my opinion. It has a 50% dividend. There's not much for me to cover here. The dividend pays for everything else. The dividend is what covers all of the losses. It answers all of my questions. I mean, people could analyze KWEB if they want, and they can try to analyze where the stock chart is going over time, look at the fundamentals of the Chinese economy. I just care about cash flow. I just want cash flow. I don't care what the stock price is doing. I just want the dividends to pay back whatever losses I'm incurring in the stock. If the stock goes up from here, that's just icing on the cake. I get gains in two ways. The stock goes up from the lows, and I get the dividends. So, I mean, KWEB is cheap. You know, I see value in that. So is ARKW and OARK. That fund is cheap. Tech is cheap. Tech got beaten down in 2022. So this is how I'm playing KLIP. And I sold puts on KWEB, and I was always looking for a way to play it. And so, you know, I might close these puts out now that I've found KLIP. And I'm so thankful for my subscribers for bringing me all these funds. And so, you know, I know it may be risky. I know it's Chinese. It's in my 5K section with all my other risky funds. I realize that it's a risk, but the dividend is going to compensate for that risk, in my opinion. So, and I just play that game, the cash flow game. And if I happen to be wrong, and you know, China blows up, or the ETF itself blows up, or even these yield max funds blow up, like with OARK, I keep such a small amount in them. I manage the position sizes to where not one name will take me down. So I'll always live to fight another day. So I think that'll do it for the video. You've seen my position on the market. I think interest rates are falling, inflation's falling, GDP is strong at 2.5%, employment is strong, corporate earnings are strong, the banks have stabilized. I'm generally bullish always on the market because it averages 7% per year returns, but I'm especially bullish now with those factors I just listed to you, plus the overall market is just cheap. It's well off its highs. The PE multiples, if you strip out the top 8 companies in the S&P, is more around 13 or 14 times earnings, which is cheap in the market. So I like the market. You've seen my past videos on how bullish I am on everything. I'm going to pay down this debt in less than 2 years by the income that you see me making up here of $114,000. Plus, we're going to get that up to $120,000 when the new yield max funds come out that cover NVIDIA and Berkshire Hathaway and all those exciting funds. We're going to be buying into those. So a small amount. So I'll be safely increasing my income up to $120,000 per year, which is another $1,000 per month. That's the goal, is to always get another $1,000 per month in income, because life is hard. 70% of Americans are paycheck to paycheck. I'm trying to beat the cost of living by increasing my amount of earnings through the market, through dividends, but safely, through diversification, through money management, position size management, all these other strategies. Short positions, which we have here in OARK, we've hedged it with SARK. Look at our past videos on that. Tesla, we've hedged with TSLS. Tesla right here, 5,000. As you can see, we have 6,000 Tesla, but we've hedged it with TSLS. I could go on, but see our past videos for more information on those funds and those shorts and those other strategies. Please comment in the section below if you have any other ways to play KWEB or KLIP, or know of any other funds like this that are generating such high premiums. Generally, I want the content to be more about the comments below, not the video itself. I said this in the past video, and I really mean it. I really appreciate all the intelligent subscribers that I have and the positive comments, and just please keep those coming, and I'll talk to you soon. Thanks.